So you were in the room, and this was the culmination of a lot of work by a lot of people, not the least of which you. You spent a lot of time doing some shuttle diplomacy here. What tipped this to a deal?
Well, this got to be a deal basically because it's been going on for 3 years since we really started this. It was 2 days before Davos 3 years ago. So we've had a lot of near misses, a little bit of success, and now a lot of success. And I think it takes a while for each country to figure out what it really wants to get out of a trade agreement, what it wants to get out of the compliance, the opening of its markets. And for China, you have to remember that the U.S. and China, other than the World Trade Organization deal in 2001, fundamentally hasn't had a trade agreement since the 1940s. So what's been achieved is very, very significant. The two countries want to work together. That's a huge change. The tariffs are starting to be reversed. There are major purchases of things, of not just agriculture, but other things. Intellectual property has been reversed separately. The conversations in December regarding fentanyl, which is killing over 50,000 Americans a year. China has really made huge strides to cut off the supply of fentanyl.
Right.
And so what we're seeing are countries that are competitive, but also have this huge relationship trade-wise. Together, these two countries, hard to believe, the way you, depending upon how you calculate it, have between 35 and 40% of the world's economy just in two countries.
Right.
So the idea of decoupling and everybody going their own way on virtually everything is impractical, and it's also not good for the world economy.
Right.
So what the two countries have done now is figure out where they can start the dialogue, how they can implement it, and it's a very positive feeling. This wasn't a grudging type of deal that's been entered into.
All right, so Steve, obviously you've been playing a bit of a role of a statesman going back and forth between these two leaders that you know very well. At the end of the day, you're a businessman, you're an investor. What does this do for you as a businessman, as an investor sitting at Blackstone? Does it amplify, does it accelerate investments that you may be making around the world and specifically in China?
Well, what it does is it provides a baseline of a better world economy. And I think you're seeing in the markets over the last sort of whatever you want to measure, the last year, certainly the last few months, as this agreement's come together. It's not the only reason for strong markets, but it's the business community globally telling you that things are better now in terms of prospects than they were before this agreement was entered into.
And so when you think about phase two, and we'll see when that gets started, what's the most important thing for you to see as an investor and a business person?
Well, I think phase two will cover a number of other things, which are important. Things that have not been resolved. There's some issues, regarding cyber and non-tariff trade restrictions, and also tariffs themselves have not been fully negotiated out in terms of where you go when these things all unwind, assuming you have a successful phase two. And there are other issues as well. And so what's important as a business person is to know that there's positive momentum. There are countries who realize that even though they may be rivals in certain areas, that in the commercial area, as much cooperation on as fair a basis as you can do is better than countries just sort of breaking apart, which is which is deleterious for world trade and for business.